Legality also. Hope I'm audible. I think this is the third in the series where we are working on this year. We are having this capacity building program, orientation program on this um, paperless digital compliance, and also like it will be helping us to reduce our this cooperation cost. The most important thing which I always believed in is basically the prevention of the fraud. If we can digitize it properly and link with the different, this architecture, then it will help us to decrease the fraud happening, because this is the financial domain. Although it is a microfinance, it's a people-centric finance. It is very much, it's a very much relationship-based finance. But as it is the financial domain, there are a lot of frauds also we have seen over the period of time, different kinds of which we have never thought of. So these kind of problems have come, fraud. So we wanted to make it more digitized. We wanted to make it more hassle free. We wanted to make it more, this fraud free movement. So in this array, legality is working with us, and legality is also our partner, our members. We work together in different areas. So we have jointly considered that we should be doing another round of this capacity building orientation program for our members on this paperless documentation, and also uh, risk mitigation, I would rather say, than fraud prevention of fraud, at a risk mitigation strategy. So over to you, legality team, to take it forward.
Thank you, Saibal sir, and thank you, Sadhan team, for organizing this. And most importantly, thanks to the audience for showing up at 3 p.m. on a weekday. I'm Aditya. I'm head of marketing at Legality and happy to have you all here. Uh, so today's session will be a short and sweet session, allowing time for a Q&A. First, I will be focusing on, Shubhash, if you can go to the next slide. First, I will be focusing on 2 minutes of context surveying what digital paperwork is and the trend it has followed in the MFI industry. Second, in about 15 minutes, I'll be covering how digital paperwork can help MFIs deal with RBI compliance, how it can help cut operational costs, and how it can help combat fraud, right? This will be the real meat of the webinar. Third, I'll be giving you a framework to help you build your own or implement a digital paperwork framework in your own organization or evaluate your existing one. And finally, of course, we'll be answering any questions from the audience. So I would request questions be saved for the end. My piece is maybe 20-25 minutes, leaving us enough time for questions. But in case it strikes you, you can ask it in the chat box. At the end, anyway, we'll be doing an open Q&A session. And just one clarification, we will only be covering digital documentation in this session in the interest of time. So the topic on DPDP Act for MFIs honestly requires one or two webinars of its own. So we will definitely be conducting a webinar exclusively focused on the topic shortly in coordination with the Southern team. So like you will be notified when that happens. So first, let's align on what we mean by digital paperwork, right? I think most of you would know, but just in case, right? So on your screen right now, you will be seeing a standard JLG agreement flow with all steps laid out, right? And digital paperwork is basically when you take out paper from these steps and go paperless with your documentation or paperwork involved in this process. So what that means is you take this, what you're seeing on screen right now, and turn it into this, a paperless JLG agreement flow. It's much simpler for your branch, for your customers, and for your organization. This type of process is fast becoming now the standard we've seen for JLG happening in the MFI industry. So if you're still physical, I think it's only a matter of time before you have an internal mandate to switch to digital. And while I focus on JLG agreements in this webinar, ultimately this type of transformation and paperless can ultimately be done for any type of documentation or paperwork, right? SME loan agreements, personal loan agreements, business correspondent agreements, and a lot more, right? We've just picked JLG because it's the most common example and common use case we've seen in the industry, and it's where the most ROI exists because of sheer volume. So the MFI industry actually, interestingly, especially in the BFSI space, was actually one of the early adopters of digital paperwork in India, right? It started in 2020, 2021 when the pandemic hit MFI operations badly. And a lot of MFIs at this time use this as a wake-up call to spur digitization efforts, right? And the first wave of switching from physical to digital actually began then. This was largely based on the operational benefits of digital paperwork. And while these operational benefits still exist, we'll be talking about in the session. In the last couple of years, what we've seen is there's also been a wave of regulations and rules where digital paperwork is now being evaluated by MFIs not just from an operational perspective, but also from the perspective of compliance. So, with that, digital paperwork has three core benefits for MFIs, which I'll be talking about. It helps with airtight compliance, it helps you cut costs and simplify operations, and three, it helps you combat fraud. And in today's session, I'll be covering the benefits in a way that will enable you to do two things, right? One is evaluate your own digital paperwork process and see whether you're getting the most out of it. This is if you are already digital. Two, for those who are still physical, this will hopefully convince you on why you need to switch and help you present a clear business case internally. Whether you're building your own or doing a third party solution, it will help you make that evaluation. So let's dive in. Right? Digital paperwork helps with airtight compliance with RBI mandates. So over the last few years, there have been many critical rules and regulations issued by the RBI. The MFI Master Direction, the Digital Lending Directions, the KFS Circular, and increased enforcement of things like the Fair Practice Code for NBFCs. All of these regulations, seemingly unconnected regulations, all end up impacting MFIs. Right? More specifically for this session, these regulations have clear expectations and requirements for the agreement and paperwork process with clear new documentation requirements created. So we've gone through these and we've extracted all the documentation requirements imposed by these various guidelines and laid them out on this slide currently in front of you, right? They're quite simple to understand, but operationally can be complex to implement. We will, of course, also be sharing this deck with you. So I won't go through each of these bullet points. You can go through these requirements in detail yourself when we share the deck with you. RBI now, with all these requirements, is actively taking note of documentation violations and is starting to penalize MFIs for it, right? Earlier this year, an MFI was fined, for example, for not including KFS in its loan kits, right?
Yeah.
So now, as I mentioned earlier, these requirements are simple to understand and therefore it kind of seems like okay, doing this in a physical process is easy. I mean, the RBI requirements seem pretty straightforward. I don't really need a digital process. But when you actually peel back and actually see from a practical on ground view, the physical process actually creates a lot of compliance gaps, right? Something that seems simple and 100% compliant actually is a gap. For example, showing the KFS to the borrower, very simple, right? It's a no brainer. Like you print it and you show it to the customer. And most cases, this is going to happen in a physical flow as well. But it's still a gap if you think about it, right? Because it relies on the ground agent to actually print it, show it to the customer, and ensure the customer has understood it, right? Easily in a scale of an MFI across branches, they can one or two branches can easily miss this step, right? And if they miss this step, there's no way for you to actually enforce or find out or actually even control this at a systemic level. Like if they choose to do it, there's nothing you can do about it, right? So agent discretion for compliance is like key in a physical flow, right? And in the best case scenario, it's okay, but it's impossible to control, right? And you have other problems as well, right? Manual errors, difficulty of managing and ensuring, say, the exact vernacular copies are there in each branch to meet the RBI's vernacular requirements, verification errors for signatures. If there's a wrong signature, someone wrong is signing, right? On the other hand, with a digital process, you can actually plug these gaps at a systemic level and not just in the best case scenario reliant on the discretion of your branch agent, right? So let's look at the example I mentioned previously, right? Showing the KFS to the borrower. In a physical process, as I mentioned, you rely on branch discretion. Ultimately, it all boils down to branch discretion, which is liable to be missed. In a digital process, you actually no longer need to rely on this, right? KFS can be mandatorily displayed at a system level. The process won't, you can make it so that the process does not proceed till the borrower has actually seen the KFS and acknowledged the KFS. And ultimately, there's nothing anyone at the branch level can actually do about these. These steps can be hard coded as mandatory. There's nothing someone at the branch can do to circumvent or shortcut these steps. Right? Similarly, for other errors, right? You can autofill documents instead of manually filling them. You can configure flows in vernacular languages, ensuring that your full compliance is not reliant on which copies are available at which branch, right? The main point ultimately is this: ensuring your physical paperwork process is compliant with all the RBI mandates requires manual on ground discretion by the branch and requires some level of operational complexity, like to ensure, for example, the correct vernacular copy is available in each branch. These two things fundamentally are impossible to control or enforce at a central level. And this is exactly what leads to gaps. On the other hand, with digital paperwork, you can actually remove on ground manual discretion and make complying a simple action that you can configure centrally on a dashboard at a central level, right? The gaps that you see in physical are actually systematically and systemically plugged in rather than being reliant on a like a consistent human action on a daily basis, right? It's a lot more durable way to comply, right? Which is what we mean by airtight compliance. So that's compliance. The next benefit is the operational one, right? Which most MFIs have switched for, right? Digital paperwork reduces costs and simplifies GLG operations. When we put, but still, why am I recapping this, right? Because when we put this simple statement to a lot of MFIs even today, we get one of two responses. One is, I already have an agent on the ground doing paperwork. So switching to digital is not urgent. It's a good to have because my agent will continue to be there even in a digital process. And the second, of course, is that like as loans tighten up, we are cutting costs. So digital onboarding or like onboarding of a digital tool or implementing a digital process is not a cost we can incur right now, right? Fundamentally, both these responses are rooted in what I would contend is an incorrect framework that MFIs currently use, or some MFIs currently use, to actually evaluate the switch from physical to digital, right? So the framework used is where there's a simple calculus, like simple calculation, where cost per e-sign is only equated with the cost of the actual printout of, say, one GLG agreement, right? Like a one-on-one comparison. And on the basis of this one-on-one comparison, everything else, business decisions, procurement decisions, building decisions flow, right? Uh, I'll be honest, if this is how you're evaluating a process internally, it's unlikely that you will get internal buy-in. It's unlikely there will be a push internally to actually make the switch to digital paperwork. But why exactly is this the case, right? Because this seems quite obvious. Like this seems like a correct calculation. So why is it actually incorrect when it sounds so correct? So let's take a look actually at the on-ground agent flow, right, in the physical paperwork process. Beyond just the cost of the printout or printing, there are a lot of hidden but very real costs involved, right? Cost of an agent's time doing the paperwork task, like filling it out, or someone else in the branch actually verifying it. Cost of the transport to, say, a warehouse. Cost of storage at the warehouse spread out over years. Extra time taken at the branch because a borrower group is now taking time to physically sign each page. That's extra time taken per loan, right? So the real benchmark, honestly, is not cost per sign versus cost of a printout. A real genuine evaluation will be cost per e-sign versus all the costs involved in the GLG process that you are incurring for every agreement that you sign, right? So MFIs, we've seen that are moving fast into digital are actually evaluating this way, like coming out with the numbers on what likely time savings are, what likely productivity gains are, and then making a decision. Some make a decision that is still not worth it, which is fine. But if you reject this framework outright, you will remain physical. So there's no point considering digital unless you have such a framework or are thinking along these lines internally, right? And a digital process has clear operational benefits even in an agent-led flow, right? Apart from saving on printing costs, you save on transport and storage costs. More importantly, I think the most underrated benefit, probably the best benefit, is you save on time, right? People at the branch get more time to do more things. Your borrowers get to sign faster, and this saves about 20 to 30 minutes per loan agreement at a branch level. And when you actually study this implementation on a ground, like on ground implementations, you realize that these cost savings I've talked about in theory are not actually just savings, they actually become multipliers for your operations. So think about an example, right? If you save 20 to 30 minutes per loan agreement per branch per day, that translates into at least a few hours saved per branch per day, right? So think about what you can do with these extra few hours, right? That extra few hours means the branch can actually book more group visits that day, like accommodate more throughput in the branch, which in turn means increased loan velocity for your MFI, right? So digital paperwork can play a crucial role, maybe not the only role, but definitely a crucial role in actually meeting your wider business goals and growing your MFI's loan operations if you scale it properly, right? It's not just you're papering over a few cost items, you're actually creating a multiplier. So that's the operational side, right? A much deeper evaluation is needed. So let's move on to the third and final benefit. Digital paperwork helps you combat fraud. Uh, Look at the physical process, and you'll see that it actually provides for many avenues of fraud in the chain, right? It's inherently vulnerable, right? One is blank form signing, where the branch agents collect borrower signatures on, say, a blank agreements. Then these agreements are filled subsequently with, say, incorrect information. And then the correct copy is not given to the actual borrower, right? On the other hand, when you contrast this to a digital process, and the process I showed you on the previous slide, ultimately, if you want to curb these things, it ultimately still relies on manual discretion. There's ultimately nothing you can do if someone chooses to actually commit fraud. On a digital process, on the other hand, you can actually systemically prevent this fraud, right? You can ensure, for example, the template is auto-filled straight from your LOS, which prevents blank form signing, and there's nothing on in the branch that they can do about it. You can, for example, implement an e-sign verification to ensure the correct signer is signing, right? You can also systemically give the borrower a correct copy where the document is automatically sent to the borrower after e-sign, right? And have an audit trail actually recording this entire process. So there's full transparency on what has happened. Uh, and like to fully achieve this, of course, your system also needs to have one or more of the following features built in. An e-sign verifier at the bare minimum to ensure the correct e-sign is being recorded, preventing, for example, say a borrower using, say, a family member's Aadhaar to e-sign, right? Or things like smart liveliness checks and face match. If you want added security, depending on your loan segment, depending on your compliance appetite. And finally, if you want, for example, to ensure that signing just happens in the branch itself, you can also have something like a geofencing type system where you want to confine and ensure the signing does not happen in an unauthorized location. We'll be covering a few more features that you need later in the last part of the section. But before that, a broad summary of what I've just spoken about. Digital paperwork, digital JLG agreements are a clear choice if you value things like airtight compliance, want to simplify paperwork operations, eliminate errors, increase your business productivity, reduce your cost of operations, prevent fraud, and of course, ensure vernacularization of your processes. On all counts, digital consistently beats out physical and emerges as a clear winner. My hope is that the last 10 to 15 minutes have convinced you uh, of this case. It's okay also if you disagree. But if they have convinced you, but there's a next logical question to this ultimately, which is the final part of the session, right? Which is what operational challenges do you need to solve for to actually achieve successful digitization at scale, right? And this is important because while I've spoken about benefits of a successful implementation, none of these, like you won't get any of these benefits ultimately if your implementation fails at scale. And MFIs operate at a large scale volume wise, probably the highest in BFSI, right? So what are the challenges, right? So the first question pertains to uptime. What happens if e-sign downtime happens? And at the scale of MFIs, if there's an e-sign downtime, it disrupts a lot of branches, right? A lot of volumes. So most MFIs first and foremost use Aadhaar e-sign. So first, let's take a look at how to solve this with Aadhaar e-sign, right? What you'll need to do is ultimately build an e-sign orchestration system or an e-sign auto switch system. This system must connect to multiple ESPs, not say just NSDL. You need to connect to NSDL, Verasys, CDSL, or how many ever ESPs you want. It must be able to detect which has the best success rate at any given point in time, and then direct the signing flow to that ESP which has the highest success rate. And this, of course, needs to be automated or otherwise it's pointless. But if it's done right, it will ensure that the chance of success in the first attempt itself are at its highest. The next type of backup you will need on the ground is when your primary Aadhaar option itself doesn't work. So a common question we receive, for example, is my borrower does not have a mobile linked Aadhaar, so I can't e-sign. So for this, you need first and foremost a layer of alternative Aadhaar e-sign options, right? So ensure your system supports not just Aadhaar OTP, but also Aadhaar biometric, Aadhaar face, maybe Aadhaar iris also, right? What we are seeing in the market and what we're seeing on the ground is that many MFIs use biometric as the primary and face as the backup. That's an increasingly favored combo in this space, right? Which ensures there's no OTP hassle actually at any given point in time. You may, of course, choose any other combination. But the basic point is do not be stuck only on one mode of Aadhaar e-sign, right? This is no longer 5 years ago. Now there are four clear modes of Aadhaar e-sign. You can deploy all of them together, right? And if you don't have at least two or three of these enabled, you are going to see drop-offs from the digital process on the ground, right? But a follow-up question that happens in MFI is, of course, if Aadhaar itself is out of the question, right? And this happens sometimes. Let's say a customer has locked their biometrics and then doesn't even have a phone that's linked to Aadhaar. These are edge cases, maybe less than 5%, maybe less than 3%. But you still want to maintain digital continuity because even 3% of a large number is quite a few cases, right? Here, what you should do, first layer is of course Aadhaar backups. You should have a cascade system where let's say Aadhaar is tried three times, right? You try Aadhaar OTP, Aadhaar biometric, doesn't work. You try each twice, it doesn't work. This cascade should then automatically display to the agent a non-Aadhaar option at that moment in time, right? Like an OTP virtual, OTP-less quick sign, or a virtual fingerprint sign. These are all valid types. They may not be as good enforceability-wise as, say, an Aadhaar e-sign, but they are way more verifiable than a physical signature. And importantly, they maintain digital continuity, right? For the edge cases. Uh, Basic point ultimately though is don't stick, and I'll repeat this again, do not stick to one e-sign. To solve for the scale at which MFIs operate, you need multiple e-sign options plugged in and orchestrated together smoothly and as automated a way as possible to maintain that digital continuity across your nationwide operations, right? A system of auto switching, cascading to alternate Aadhaar options, and a third fail-safe layer of cascading to non-Aadhaar options if absolutely necessary. So that's the first question. The next question to solve for is where borrowers, of course, most borrowers don't have an email ID. And SMS delivery usually just gives a link of the document, right, when they've e-signed it. Here, what you often have to do at a branch is you actually have to print that customer copy. So there's still some element of paper. Uh, and here also you're reliant on branch discretion. So it's kind of a gap as well, potential vulnerability. What you can do here is you can also consider a system where you have the final document sent to the customer on WhatsApp, right? The advantage is that you get a delivery confirmation, you get read receipts, and the customer actually gets the PDF directly on WhatsApp rather than just a link. And of course, this may not work in all cases, but it will definitely work for some, and the number of cases it will work for will only increase as smartphone penetration and internet penetration increases. So this is an option, good option, building a WhatsApp flow, and you can have it as an auto trigger also. That as soon as the e-sign is done, it auto triggers onto WhatsApp. So that's two operational challenges. The third operational challenge is first two were kind of reliant talking about digital continuity and uptime, maintaining digital. The third operational challenge is a compliance challenge, which is complying, and also customer experience challenge, if you're being honest, right? Which is complying with RBI Fair Practices Code, which RBI is increasingly enforcing, right? So here, RBI says that you need all your communication to be in vernacular. So here you need, of course, your document itself to be in vernacular, which I think most MFIs do have. But in a digital flow, the document itself is not the only communication. There's also buttons, there's an entire interface around it, there's consent involved that they have to give in the digital interface. You need to ensure this interface as well, which is part of the overall communication, is also in a vernacular language to ensure that you have watertight vernacular communication across all touch points. There's no gap anywhere, right? So that's another thing. Ensure that your eSign interface has that vernacularization. Fourth operational challenge. Borrowers sometimes use Aadhaar of a family member or a friend. How to stop this, right? So above you have a cascade system where I said that if they don't have OTP, they go to biometric and things like that, right? But your borrower does not actually know you have this, and they may even out of good faith try to use a family member's Aadhaar because they think that they cannot otherwise get the loan if they don't have this sign, right? But ultimately, at an MFI level, you want to stop this. Uh, what you need to do is essentially build a verification mechanism at your e-sign application end, right? So where after UIDA generates the e-sign certificate and it's passed on to the ESP and then to you, when you receive the e-sign certificate onto your e-sign application layer, all right, whether it's your own system, whether it's a third-party vendor, you need to ensure that that application layer actually screens and verifies the certificate details passed on by UIDAI and verifies it with the details that you possess. For example, a name or last four digits of the Aadhaar, right? The system should then, if there's a mismatch, block the e-sign, which essentially then prevents wrong Aadhaar e-signing, right? In our experience, we've seen over the years that more than 2 lakh attempts have been made of fake Aadhaar signing, which have been blocked by MFIs who use our e-sign verifier feature. And this is just a segment of the market, right? Um, and as mentioned earlier, you can also further bolster this process by adding other layers of verification like liveliness checks, geofencing, face match, and more. These additional features are, of course, optional depending on your compliance appetite, and it's a call you need to take internally. To help you after the session is over, because I think like I've covered quite a few questions and I've covered quite a few points, we've actually prepared an evaluation framework for you for a digital paperwork system, right? So think of this as your draft RFP for digital documentation, right? So whether you're evaluating a vendor or whether you're building your own system in-house, or whether a third party is building a custom system for you, or you already have a vendor and you're judging them, right? Like you're actually evaluating whether it's giving you the correct feature set, correct ROI. This framework will help you know what exactly you have in your system, what is pending, and what is lacking, right? When we share the deck, you'll be receiving this. So you can go through this in detail. And of course, finally, just a small plug. If you don't want to build your own system, you can use Legality. We are a plug and play system with everything we mentioned in this presentation so far, designed to help MFIs build paperless JLG and other document journeys in a matter of days, right? Very short time. And a lot of top MFIs in the country are already in the process of implementing or have already implemented Legality at scale. So if you're an MFI on this list, maybe your vertical isn't using it yet, do reach out to us. If you are not on this list and you're using Legality and want to join these MFIs, do reach out to us. If you are an MFI on this list and you know you're using Legality, but you saw something here which you realize is not live in your current implementation, please do reach out to us as well, right? In case you're not getting the most out of Legality, which you saw in this presentation, do reach out to us. And wanted to end by simply also spotlighting an upcoming piece of content we will be releasing in August and which we will be sending to Sadhan members early. It's a full KFS playbook guiding lending organizations on how to build and maintain legally compliant KFS processes. We will be sending across, of course, early access to Sadhan, but you can also sign up for our weekly WhatsApp list where once a week we send out either a relevant regulatory update, latest product update, or case studies from on the ground implementations focused on paperwork, right? We focus just on the process of paperwork and also DPDP compliance, which will be the session of our next webinar, topic of our next webinar. So with that, thank you so much to the Sadhan team for organizing this session. Thank you to the audience for being patient. I think I've spoken for too long now. It's been about 25 minutes, 30 minutes. So let's take up the open